Payment Services Directive is undergoing a review later this year or in the course of this year. We might and might not touch a little bit on that, but the Commission's work is still ongoing. For us, really, the purpose is to look at how the vehicle of the Payment Services Directive, which entered into force in 2008, has facilitated the emergence of a whole new market of payment service providers in a cross-border context, and has been, I think, really essential to the innovation and creation of an innovative payment market in Europe. With that, I would like to introduce my panel today, and thanks already for my panelists for being with me. We've got Sehu Pereira with us, who's the lead on payments within the Retail Financial Services Unit of the European Commission. We've got Marius Georgilas, who is a board member of the Central Bank of Lithuania, and anybody who follows this policy area knows that Lithuania has been very much at the forefront of attracting, supervising, and building experience with innovators in the payment space. We've got Eli Baruti, who is European Head of Government Affairs at American Express, but also importantly today the chairman of EPIF, the European Payment Institutions Federation, which brings together innovative non-bank payment providers and has done so for the last 10 years. And Hartwig Gert-Hartinger, who is the head of, the Vice President Group Regulatory and Government Affairs at PaySafe. A long title, Hartwig. I hadn't realized how long it was. PaySafe being one of the leading money institution providers in Europe. So we've got a good cross-section here. Maybe I can start with you, Sehu, to kind of give us a sense as to how you think the Payment Services Directive, which was a brainchild of the Commission, has contributed to innovation in this payment sector.
Good morning to all. I guess that Minister van Petegem's intervention was a perfect introduction to this panel. And it greatly facilitated my task today of talking about PSD2 and innovation and technology. In fact, indeed, when you talk about regulatory frameworks that support innovation, PSD2 immediately comes into the conversation. PSD, the first iteration of the Payment Services Directive, PSD1, is what opened the way for non-banks to get into the payments business and to be regulated based on this principle that is very dear to us of same business, same risk, same rules. So after the PSD1, PSD2 further supported innovative business models such as account information services and payment initiation services, removing barriers to those activities. And open banking is still in its infancy, but we can already see the great potential, in particular for paving the way to open finance and open data society. So in the retail payments strategy, we already reflected about the key aspects that a regulatory framework supporting retail payments needs to have, and they are in substance, they haven't really changed over time. They are still there, but they need to be reinterpreted based on market developments. So our fundamentals are indeed to support competition and innovation, to create trust and protect payment service users, also support a high level of security, which contributes to that trust. So we had the opportunity indeed when designing the retail payment strategy to reflect a lot on those and how we should interpret those in the light of market developments. And I can give you a few examples of how, let's say, how our thinking has led us to look into some key areas. For instance, when you think about the principle of same risks, same business, same rules, you inevitably need to consider how the entry of new players into the payment scene is, let's say, needs to be taken into account, and whether in this regard the scope of the PSD2 is still right in terms of the services that are covered, in terms of the new payment products and technologies. So we need to think about that, and we need to take into account the reality of the development of crypto assets and stable coins, for instance. While we know that MiCA is the proposal that we have on the table that is currently being discussed in the co-decision procedure, we have to think also about the payments activity aspects, because MiCA does not regulate those. So we will need in our reflection to factor in how, the MiCA and PSD2 interact, and and also how other payment legislation such as the M&A directive interacts as well with the PSD2, and any opportunities for further alignment. We need also to consider what kind of risks new players such as technical service providers bring into the payment ecosystem, and how we can address those risks so as to indeed ensure a high level of trust and security. And in general, a high level of consumer protection, which is also another one of our fundamentals, and where we need to have a real close look at our consumer protection requirements, whether they are still fit for purpose, taking into account the new payment products, technologies that are developing at a high pace. In general, indeed, we also need to look at the level of security, the objective of ensuring a high level of security. And we know that SCA has played a really strong role in ensuring a high level of security. However, fraudsters are always ahead of the game, so we cannot ignore either new developments such as social engineering and scams, and we also need to have a good reflection about convenience, the trade-offs between convenience and security, and also inclusiveness. And in general, we will also need to consider how we can still, ensure that we don't have barriers to innovation, and in that regard, it will be very important for us to consider whether there are still any barriers to the full deployment of open banking in particular. all this needs to be underpinned by a solid evidence gathering process, and also wide consultation of the industry and stakeholders. And this is exactly what we are going to do with the PSD2 review. We have launched this process, and our evidence gathering will rest on three main pillars. The first one is a study that we have commissioned that will look indeed at market developments and the experience with the PSD2 implementation, what has worked well, what has worked less well, what lessons we can draw. And it will help us also to have a forward-looking approach to PSD, to payments regulation, and what needs to be improved. The second building block is a public consultation, which we will launch in the course of this quarter, public and targeted consultation. And we will, of course, complement it with ongoing consultations with industry in several fora. We have also asked the European Banking Authority to respond to some questions regarding that are related to their mandate. So this will help us indeed reflect on how, on whether PSD2 is still fit for purpose, and if we need to bring some improvements. So I guess I will leave it at that for now, and I will give you back the floor, Nicholas. Thank you.
Thanks, Sihu. I think this was very, very, very interesting to set the scene, the breadth of some of the issues that were addressed in the PSD, and some of the issues I think we come back to during this discussion. But Marius, I would like to come to you in a way from a supervisor's perspective, trying to make the PSD work day to day in the public policy space. How do you see the functioning of the PSD, and maybe also the e-money directive, some of the other regulatory frameworks? And have they worked well? Have they promoted innovation? Where might be some areas for further reflection?
Good morning, good afternoon. Many thanks for having me. And thank you for this very timely event. And I think that Payment Services Directive has been very instrumental in pushing European Union and Eurozone, more specifically Eurozone, payments architecture into much more innovative space. And from the Bank of Lithuania perspective, which is not only a supervisor, but also we own our own payment system, I can say that Payment Services Directive has served its role. It has been, as I said, very instrumental, and we see that specifically in the domestic market with very vibrant electronic money and payment institution community developing. But I would say that the review is definitely needed. And I'll lay out my 4 points that I would like to bring to the discussion here. But before I do that, I also want to link it at the very beginning to the other debate that is happening, which is not immediate, but is out there, and it should be put into the perspective. And here I mean what has been touched a little bit by colleague Siu talking about stable coins, and that links to central bank digital currencies. And the reason I want to bring it at the very beginning is because regulations are being designed in these incremental, or if we talk about kind of automobile industry kind of facelift approach, you know, a little bit touch there, a little bit touch there, but we might be entering into the phase where we need a completely revamping of the regulatory architecture. And I'm not sure we are there yet, but it's a context. And like in an automobile industry, we know the date when internal combustion engines will be decommissioned, we have to have this perspective of what is happening in the payment space once and if central bank digital currency is being introduced. But before that, we are today. And in today's world, we also have immediate issues, and let me bring those to the forefront. So as was mentioned in the introductory keynote by the minister and also mentioned by CEO, we are facing new business models being emerging. And the one that is really drawing our regulatory attention is the use of payment service providers in multiple and kind of these very focused business models, where one payment service provider is being used to provide in interlinked way multiple services. And in technical terms, I'm talking here about white labeling, where payment services providers are being providing their services as a white label solution, be it for e-commerce, be it for managing and safeguarding the funds for crowdfunding, or providing semi or soft credit in buy now, pay later arrangements. And all of those new business models are asking very specific regulatory questions and also consumer protection questions. And that's my second point. Payment Services Directive needs to be reviewed from a consumer protection perspective, bringing into the forefront the new business models so that we understand and provide the very clear message to the consumers whose responsibility it is at each particular instance, provide clarity how these payment services providers are being accessed. And here I mean the continuous movement into the digital space that consumers are losing. Again, what the minister was referring to, the usual way of coming to the branch and having an interaction which provides the safety to the consumer. And when we move into the digital space, account opening, account closing processes, what happens in the case of fraud, and we see that emerging as well, and what happens once, and we already see that happening in the single payments area, once payments start becoming really all of them instant. So the safety that the consumer has been used to needs to remain, or the processes need to be reviewed to ensure that consumers get the same customer protection what they are used to, or explicitly they know what type of risks they are undertaking if they utilize these new emerging business models. My third point relates to invitation to talk about Electronic Money Directive and potential interlink between Payment Services Directive. And that's, I guess, what the point where we need to decide: are we doing a facelift, or we are switching from internal combustion engine to electrified vehicles? What do I mean here? Then Payment Services Directive and Electronic Money Directive were created. We wanted to provide impetus for the industry to engage in opening the data. Now we have open banking and with some successes already in place, and the clearly established lines between what is electronic money and what it is used for is not clear anymore. Electronic money is not being used in closed circles for very specific purposes. We see electronic money companies providing payment services exactly in the same fashion as banking institutions, which all of them are providers of payment services. And here, an invitation maybe to look at the Payment Services Directive in combination with Electronic Money Directive, and in the interest of simplification, potentially merging the two. And that brings me to my final point, the need for consistency in regulatory space and acknowledging the interplay between highly specific regulation for electronic money, specific regulation for payment services, data protection, anti-money laundering, digital assets in MiCA, and exclusion and inclusion of what is regulated by these acts, and also the technical elements, which are also very important in terms of onboarding the customers, identifying the customers. And here I'm talking about DORA and EIDAS regulation. I understand that I'm asking, it's a wishful thinking, but we just need to be aware of that and acknowledge the difficulty that market players face once they are being faced with the uncertainty of regulatory reviews, and sometimes these specific legal acts are not moving at the same speed. And a good example is stablecoins, where at this juncture, with certainty, we do not know if that will be the same thing as electronic money token, or that will be electronic money. It remains to be seen. And once we put it in one shelf, everything will, of course, will follow. But at this juncture, it's not clear. So we need clarity and more specifically consistency. And I'm sure that with all the laid out plan ahead of us and the involvement of all the regulatory and industry bodies, we will achieve that. Thank you. And I'm ready to discuss.
Thank you. I think both Seu and you, Marius, set out a really interesting kind of agenda for reform. And I think one thing I found interesting, you said at the beginning, this, do we incrementally change regulation or do we take that quantum jump forward, is actually the main reason why we started this conference 6 years ago, because technology challenges the current regulatory framework in a way that we hadn't seen before. And you can argue that we incrementally work within that framework, or maybe we reach a point at some stage where we have to fundamentally rethink the way we do things. I think the jury is still out on that. But I think, Eli, having listened to this, potentially quite an ambitious agenda for change under the PSD, how do you view the PSD, and do you think now is the time to start and review it, and if so, in which areas?
Thank you very much, Nick, for the invitation, and for us as EPIF, I think, to be represented here and to share our views with the audience of this conference. I think Seu and Marius have as you mentioned, set the scene very, very broadly. So I'll try really to focus on three main points. So the first theme would be a bit how the PSD in general, so 1 and 2, have worked for us as an industry now, as we are the children of the PSD as EPIF. Then I'll talk a bit about the current state of play, and then at the end maybe what needs to be changed or looked at from our perspective. So if I take the first point regarding the PSD as a framework, we currently believe, and we have always believed, that this is a great piece of legislation. It has been copied in several parts of the world, at least its principles and what it brought to the market. And this was very, very visionary as an instrument, thinking about how we can bring more competition, how we can help maybe players that were already there. Some were created a bit afterwards, from one side, and then at the same time provide high quality services and ensure consumers are protected. And I think on all these objectives, the PSD has been a success. The fact that we have EPIF as an association, there with many business models, more than 10, 12, I think, if I'm not mistaken, shows how vibrant this industry has been and how important and successful the PSD has been. So this is a bit, PSD1 in its genesis, and how it was visionary, and it did change the market as such, especially from an innovation perspective. When we look at PSD2, what it tried, to do, it continued, I think, the path of PSD1 by trying again to bring forward more players, and this is, the whole open banking, if you want, area. So it started in payments, and this has been also a success, seeing, the number of players that have been there, the use cases that have been developed. Again, it's not the end of the story, but this has been very, very successful, at least from our perspective. And the other element it brought was more focused on security and with the SCA rules. And again, I think we would all agree that in principle, the SCA rules are a very positive, or have been a very positive development in the market. But much could be said, I think, in this forum and maybe elsewhere about whether the approach that was taken to the issue of combating fraud was the correct one. And here, I think that's maybe for a further debate in this session. I don't think the length and the way, it was at the end, taken and the time. And again, and I don't want to blame anyone here. I think we're all responsible in one way or another. But I don't think this is an example to repeat. So if really we take a step backwards and then we look how the rules have been, developed at level 1, level 2, the industry, the forums, etc., I think we ought, to have a better result in the future if we're thinking, about something similar in PSD3 or elsewhere. So this is probably an area to be reassessed, at least from a procedural point of view, or how to get to the objectives we want in terms of combating fraud. Thinking more towards, the future, what could the PSD3 look like, or do we need a PSD3, or shall the PSD, be reviewed in the first place? I think the clear answer is yes to these questions. And why yes? Because any piece of legislation needs, to be looked at a certain point in time to check, how it has worked, what it has brought, what could be, modified, what could be fixed in terms of issues or problems. And here I could say that despite the fact that PSD2 has been a success, as I mentioned, there are a few areas that need to be at least looked at or see how they have worked. I'll start first with the most obvious one when we think about the open banking rules. Again, it's a bit blurry right now to talk about that, because we know you have, in parallel several paths that the Commission is taking. First, reviewing the PSD, but at the same time proposing, or at least we're expecting a proposal on open finance, which definitely would somehow, tackle some of these issues. And then also with the open data and the Data Act that we have seen. So I think in this area, when you look at it from the industry perspective, it's not always easy to communicate, internally to your business leaders, like, again, what's going on, which tool would prevail, which rules, shall we look at? Shall we look at everything? How shall we develop, the business models and business cases? So I think the sooner the better if the Commission comes with a clear vision, how all these initiatives would work with each other, or how it would be applied in practice. I think this is really essential to come from the Commission's side. So again, we don't know right now. If you ask me whether the open banking rules are going to be discussed at PSD3 or in open finance or elsewhere, I don't know what to answer. I have to say, let's wait and see. Maybe Sue later can enlighten us on this piece. So this is the first area. But if we talk about it, more technically, I think again, the industry has been, very vocal about what needs, to be improved in this, relation between the TPPs or the AI, SPI, and so on, and the banks. So how this could be improved in order to bring more innovation and better consumer protection. Always, I think the same objectives. Again, we could talk a bit about whether we need, in terms of APIs, whether we need one standard, whether we should keep, the current approach. We do believe like probably a common standard, harmonized APIs could help, roll out products across the EU and not having different, I would say, rules or technical standards in different countries. This could be helpful, also to have more and more adoption. But again, A lot could be discussed also in this area, but I don't want to take the whole time. I'll focus maybe on one last aspect when it comes to the review of the PSD, and that's that's an aspect that is not always looked at, I think, when we think about PSD2. And two quick themes there are the surcharging rules and then the open access rules that have been adopted also in connection with another piece of legislation, the interchange fee regulation. But again, we believe these areas need also to be looked at to see also how they have functions, whether they have achieved the objective that were set in the beginning, whether they help competition or they rather stifled it, or whether consumers have been more protected or less. I think it's important to also address these rules. We do believe, from our perspective, you need more harmonization when it comes to surcharging, for instance, to bring again the same level of consumer protection across the EU and end up these different situations in the member states. And then last but not least, I know it's up and in the air, we don't talk about it a lot, and the question is whether the licensing regime for PIs is still accurate, whether we need a different supervisory model. Here I would just mention a word of caution. Let's make sure there is a real issue to address before copying or replicating another model that could exist in another area of finance. I mean here banking in particular. So let's just make sure what we're trying to fix before going down that route. And then we need just to focus on what is essential, and hopefully and this would mean continuing to bring more competition, and then have innovation. And as EPIF, we would be the first happy trade body, because this would mean we would have more members, more representation, and an even more vibrant market. Thank you very much.
Thank you, Eli. I'm kind of already starting to see how we can get a discussion going. I've got a number of themes coming out of the three interventions. But Hartwig, I'd like to bring you in. Marius made the point, maybe merging the e-money directive and the PSD, because I think the e-money directive is equally a good example of proportionality and an appropriate regulatory regime for the risk that is posed. You kind of represent both payment institutions and e-money institutions in your work. How do you see that? And also in general, how have you seen the market evolve over the last 10 years?
Yeah, thank you, Nick. Very interesting comments so far. And yeah, I'm really pleased to be here. And again, thanks for having me. I think, the payments regulation in Europe is just a really big success story. I mean, when you look back, it's not only, we pretty much focus on PSD2 at the moment, but actually, I mean, the success story started in the year 1997, or whenever, the first thoughts came out in relation to the e-money directive. And I think, what brought innovation in Europe, why Europe was such an innovative market, was really the European passport. I mean, prior to the e-money directive, everyone was just really looking into can I enter the German market? Can I enter the Spanish market? Maybe just local domestic solutions. But what brought the innovation was actually the ability to passport across Europe. And I think this was I mean, such a big, such a powerful, such a very interesting market. In particular payments, I mean, this kind of drove the development not only of the payments market, but then also of the digital market, of the e-commerce, of the single market as a whole. I think this was just a very good initiative in a very early stage. And I know at the time, I mean, the discussions were around, oh, is it too early? What is e-money at all? Do we know it's going to be, successful? Can we, maybe we should wait a few years. But I think it was just the right time, and it was just the right level of regulation, which was supposed to enable companies to compete in the payment space with the incumbent players at the time, namely banks. And I think this it needs to be called out. It's not so much that the regulation enabled certain business models, but it enabled the development and the rollout, into the European market, which then makes it, you know, economically feasible in many ways and more attractive to invest in that type of sector. I think we've heard a lot about you know, trust, and I think what PSD 1 and 2 really added is, you know, the trust, maybe not so much in relation to you know, the security as such, but more, you know, information rights, liability rules which actually protect consumers, because only if consumers feel safe in using a specific payment instrument, and that's true for, you know, innovative payment solutions, or also the, you know, the normal you know, old-fashioned bank account. I think it is key, you know, people trust in new technology if they know, you know, if they get it wrong, they won't kind of have big losses. And I think this was exactly again, I think one of the pillars of the European success story. If we look, let's say, at I mean, I liked what the Prime Minister said about around kind of technology needs to work for people. I think you know, and I mean, maybe building on what Ellie said around you know, SCA. I think what we went a bit too far, and in a way in kind of putting, let's say, security on top of everything, and you know, kind of losing the balance in a way. What I think we need looking forward is, you know, more flexibility for companies to here innovate in that specific space. I mean, we need, let's say, a results-driven regulation, which says, look, I mean, your fraud levels, depending maybe on the industry, it can be different. I mean, depending on what type of payment service you have, it could be different. But, you know, you need to kind of set in a way, or have a target of fraud levels, which maybe don't only include, you know, the authorization fraud, but also other types of fraud. It's all, you know, a big picture. It's not isolated. So what we're currently doing is a little bit, you know, we have a problem here with card payments, you know, online. We need to fix it. Oh, what can we do? Yeah, let's introduce SCA. I think, you know, in the future, we need to kind of really have maybe a suggestion, so companies know how to be able to comply with, you know, this is maybe the standard, but there need to be alternative ways to achieve the same goal. And I think this is maybe another potential booster for innovation, really. If we allow companies to develop their own solutions, maybe specific to their own products, to their own business. And I think this is what drives the variety, but also innovation in that space. And then I think, you know, the kind of last point before I get to your more specific question, Nick, is, you know, open banking. I think you know, there is a discussion around, also here, I think, you know, for PSD2, it was kind of, yeah, so PSD2 took on the, you know, the open banking flag and you know, just carries it across Europe. But overall, I think we need to acknowledge the innovation happened before PSD2. You know, there were solutions in the market before. You know, it was maybe one of the triggers for PSD2 and adding payment, you know, initiation services and account information services. So it was kind of fixing a kind of a regulatory, a kind of maybe competition antitrust issue via regulation. But I don't think here, again, it's easy to speak afterwards. I think from the very outset, you look into, do we need let's say one API? You know, do we need to give one kind of solution? Is that compatible with the question around you know, technology neutrality? And I think, you know, we put technology neutrality you know, above the kind of the easy, you know, connectivity potentially. And then there was a question of who is going to develop the API and so on. I mean, I kind of understand, but I think where kind of why decisions have been made in the past. But overall, I think now the lesson learned is really if you want to ensure an easy connectivity and interoperability, between certain players in the market, there needs to be one standard. Again, potentially with the room to develop additional standards that can be offered too. But the lesson learned is really, it's not working as it should at the moment, and it's really difficult for companies, PISPs and AISPs to connect and really get services to their customers in the way they want to. I think here as well on the open banking, and now we have it in PSD2, and that's the basis. But I think there needs to be a broader discussion around access to data for specific regulated sectors, like the payments industry, the insurance industry, the banking industry, obviously, but maybe other industries as well, where we talk about access to specific data in order to help innovative players to kind of deliver better services to customers and to help them manage their, the life has become really complex, and in many ways it's difficult to kind of keep track on everything. So these advisory services where you can actually kind of allow access, and then they kind of help you make the right decisions. It comes with all sorts of other issues, but I think this is something we need to look at from a more let's say broader perspective. And so I'm not sure if the Payment Services Directive as such is the right place for this wider discussion. In terms of the e-money question and PSD2, and maybe we should merge them. I think there have been discussions in the past already around this. It was just a timing issue, as it felt to me. There have been attempts to merge everything into one piece of legislation. I think obviously the cross-referencing is sometimes difficult to follow, but I know member states actually transpose in many ways the respective pieces of the directives into maybe one legislative act in their country and jurisdiction. So basically, this type of question in a way disappears. But I think at the point I would like to make around e-money, I think, as I said in the very beginning, e-money was the real driver for innovation. And if we now look, let's say, into the number of applications that we see, in the number of authorizations, e-money institutions outweigh payments institutions by far. And why? Because they can actually, provide the full set of payment services under that type of regulation, or under that type of e-money permission, and it allows to keep money as well. So it's not limited to just the execution of a payment transaction. I know it's a little broader, but what is really powerful in my mind is that you can actually, yes, compete with banks on that specific sector of keeping money for a little while, and then executing payments and receiving payments, and offering the customer an account. But I would also like to make the point, it's not competing with the banks as such. It is competing with the banks with a full focus on the payments aspect. And this is, I think, why banks now also have to innovate, why banks also have to say, look, there are companies out there based on their e-money authorization, they allow customers to open an account, and then maybe in many cases allow for electronic payments, instant payments already, cross-border payments at a very low price. It's really, I think, one of the discussions, as Ellie said, I think we need to be really careful. Is there anything we need to fix, we have to fix, or whether it's just in a way a cosmetic kind of attempt to really put together two different directives. But at least from my perspective, there is no need to fix anything on the e-money side. I think this is really what makes Europe strong in the innovative space on payments.
Thank you very much for your kind of views, Hartwig. I think listening to all of you, I think there's two themes kind of I would like to explore over the next 15 minutes. And maybe I start with you, Hartwig and Eli, and then pass back to Shao and to Marius. Maybe to the two of you coming from the industry, one theme that's come is the balance between proportionality, as you said, you know, Eli, sometimes need for more harmonization, proportionality versus harmonization on the one hand, and also the relationship between sectoral legislation and more horizontal legislation. We heard anti-money laundering, data privacy. So how do we square that circle? I think Hartwig already alluded to more outcomes-based assessments, but how do we manage proportionality and kind of more specific targeted legislation? Maybe Eli first and then Hartwig.
Sure, thanks, Nick. Well, this is the 1 million euro question, I would say, how to get all this right. I don't think there is a magical solution into like we should always go for harmonization or should always go for proportionality. I think it would really depend on what we are trying to achieve. I think the more harmonization in theory that is there is the better. So as a general principle, and then in certain aspects, I would say proportionality could be important. Now I want just to point out on an issue that Hartwig has raised, and that's the sometimes the outcome-based regulation or rules. Well, for me, this again in theory shouldn't be applied everywhere and to any piece of legislation or to any theme or sector. But again, based on certain experiences, and here I think in the area of the security of payments in particular, and I would be really interested to hear from Seu and Marius what they think. Again, in order not to be always, I would say, caught up by fraudster or by a new technology or by something else that is happening, isn't it better, again, to fix the targets that we want for our area? Here we're talking about the EU, and we're talking about, again, fraud rates, for instance, and then let either competition happen or let the industry innovate towards any type or any solution they want to be using. So again, in theory, it sounds appealing to us, I would say, because then we don't need to adjust and change the systems every 4 or 5 years whenever something new happens, and then the regulation would change that. So again, I don't know what I would really be interested in that, and why this is not happening or has not happened before, and whether it has a chance for the future. I think this is important. Now, on the second part of your question, I'll be very, very quick. We need, and especially the Commission needs, to look at all these pieces that interact with each other, with one eye, one lens. Again, they all come from the Commission. So for us, the industry, they all make sense. We need to apply all of them from a business perspective. We cannot separate PSD from AML, from privacy, and so on and so forth. So all these rules, we need to put them in place. We need to build processes around that. So the only maybe call we would have from the heart is that more care is given when the Commission is reviewing some of these instruments. I know sometimes the timings could be different, but we have spoken for ages about the need for harmonized AML rules, especially for payments, and thank God this hopefully is on the right track right now. But it's more now we hear more about the interactions between PSD and the GDPR and the whole area, and we've seen letters shared very recently. So again, I don't think we can solve this debate with a magic wand, but at least to give it more care and to be more aware of the differences there. Thank you. Thank you.
Maybe the same question to you, Hartwig. I know we talked beforehand, particularly on the interaction with the anti-money laundering framework from an e-money perspective. How do you see, again, the balance between proportionality and sectoral approaches and the interaction with other pieces of legislation?
Yeah, thank you. I think what I would like to call out, and just the AML is one example, is really, the innovation, let's say the potential for innovation in the space due to new technology. And we've seen that in strong customer authentication, fighting fraud, can be done with the two-factor authentication, but there are also other ways to actually fight fraud. And here on the AML side, I think it's exactly the same. You have extremely powerful tools now to actually monitor transactions in real time, taking into account hundreds of factors that kind of give you an idea whether or not a specific transaction, a specific onboarding process is actually potentially suspicious, or is absolutely in line with what you see on a daily basis for all the transactions. And I think that is even more true if you look at the very specific business models that e-money institutions have. So you don't have, like, in many ways, all sorts of different transactions flowing through your systems, but you have specific products that are used in many ways in a very specific way to fulfill a specific payments need. So you have a lot of data around the same type of transaction, and you are online. So you can actually do that in many ways. You see a lot of things that, because it's your e-money system, so you're connected, merchants are connected to you in a certain way. So basically, it is kind of this type of, ability to monitor transactions in real time and to apply rules and restrictions in real time on transactions is something that we kind of need to take into account. It hasn't been there when the big pieces of legislation have been discussed. So when it comes to the right balance, I think it's always difficult. That we talk about, is it future proof? Is something future proof? The problem with, and it's natural. That's how legislative processes work. But we have a discussion today. The process takes a few years. Once the text is finalized, there is some new technology potentially which actually would make us change the legislation, but we don't, because we need to wait for a few years. So I think what I think is needed is, again, here the guidance. What is it that you need to achieve as an institution, and then the institution, regulated firm, it's an EMI, it's a PI, or a bank, can then actually have some room to choose the right way to manage the risks, be it fraud, AML, customer onboarding. And that it kind of goes hand in hand with, I think, and that's also good, a close, obviously, supervision by the respective regulators. I think for a long time, the UK has been the hub, the only hub for e-money institutions in Europe. Since Brexit, that has changed. A lot of, countries have gained a share of the cake. Obviously, Lithuania has got the biggest share of the cake, which is also good because it kind of creates this overview, and you can compare how companies do it, act. So I think this is why now I think it's the right time to actually give some more freedom and flexibility to the regulated entities, which will then also obviously create the right balance.
Thank you, Hartwig. So what you're referring to effectively is a more risk-based approach, or at least within a certain parameter, some discretion for risk-based approach. I just want to remind the audience that, of course, you can ask questions. You've so far been a bit slow. It's kind of the morning, but please feel free to kind of come in with questions. That said, I want to come to the last kind of theme, and that's for Marius and then Seu, which is the other big theme that's come out of this. The PSD led to far more players in the market, much more fragmentation in the payment chain. Fragmentation in the sense of more players being involved, be it third-party technology providers or multiple payment service providers or banks and payment service providers, creating more competition, more dynamic choices, but also public policy challenges and supervisory challenges. And we've touched on 4. Strong customer authentication, SCA. How do we make sure that the fraud information is handled well along a payment chain? We've talked about open finance or open banking. So basically, how do we deal with customers' data if that customer wants that data shared for competitive reasons? Ailey talked about open access in the infrastructure. And we then also talked at the end about access to data more generally. I think looking at this kind of nature that the payment chain has become more, let's say there's been much more competition introduced into that payment chain. How should public policy respond to this, Marius? How do you respond as a central bank to this to ensure that ultimately the outcome is, as you say, ensuring customer protection and competition?
Great question. And yes, we are dealing it on a daily basis. And without going into very particular details, I guess we are here solving the timeless issue of failure of the commons in some sense. There is no public garbage in a private park, but there are issues in public space. And what type of public space we're talking here about? Fraud, money laundering, tax evasion, level of privacy, access to data. And I guess we need to find a balance, and we are looking for that balance, and the people after us will be looking for that balance. And it's in some sense a little bit of political process, and that's why that legislations are being decided by politically, democratically elected representatives. And it's not a technocratic discussion, because we can ensure any level of privacy. We can ensure that payment services providers are acting almost identically to police in preventing fraud. But do we really want that? Or assign responsibility, also called property right in the sense of the public space, to ensure that if something bad happens with fraud, it's the responsibility of the payment services provider who initiated and executed that transaction. All of a sudden, everything becomes very clear, but we know the consequences, and we don't like the consequences. But we would like to provide the certainty and the coziness, the cushiness to the consumer that we take care of them. But we cannot have both sides of the world, and we have to find the right balance. And that's what we are discussing here about in each level, be it privacy, money laundering, access to data, monetizing data, introducing new business models which instill competition, because we don't like monopolistic extraction of rents which accumulate to monopolistic powers. Yeah, that's my view. And what does it mean in practice, and how can we find that balance? My personal view is that we shouldn't be expecting market participants to become payment services providers, to become responsible for these very specific risks, which I don't think they are very best placed to manage. And we need to appoint those risks to the institutions which are best managed to manage those risks. If it is fraud, we have specific agencies which deal with that. Maybe we need to provide better data to them, interconnection, kind of open police type of thing, in a sense of open banking, open police. If it is tax evasion, there's already upcoming legislation which will require platforms as well as payment services providers to provide data to the tax authorities. So maybe, tax evasion, it is the responsibility of the tax authority. And payment service providers should be thinking about efficiency, customer service, and ensure that the product is right. So that's my view.
Thank you. Yes, I was actually thinking of the VAT reporting when you talked about this. More obligations, also maybe intellectual property right defenses being imposed on payment institutions, and there's only so much a payment institution can do in a day. There's an interesting thought. CEO, over to you, kind of, so to speak, the very last word. There's one small question for Eli at the end on surcharging, but maybe your thoughts first, CEO. You listen to everybody. So basically the PSD3, if it comes, will be an easy task.
Well, that is not the conclusion that I expected, but it will be indeed a very interesting task, because we have a great opportunity there to do a quantum leap. That's what I would like personally to do. I would like us to be visionary. We adopted a retail payment strategy, which I mentioned earlier, a bit more than 1 year ago, and that follows a little bit, you know, the same ambition. We want to have a vision. We want to connect the dots. We want to think outside of the box. We cannot think that we will achieve the perfect regulation. We cannot pursue impossible dreams. You know, we will probably never have a PSD that is future-proof totally, because I think perfect in reality does not exist in this world. We have to keep things improving, but we will do our very best to do this quantum leap. For that, I think we need absolutely to be open-minded. We need to look into indeed what has worked well with the PSD. I have heard a lot of nice words about the PSD, but and I agree with those words. I think it has indeed helped shape the market in the right direction over the last decade. But we must be conscious that indeed we can certainly improve things, and that's what we want to do. We shouldn't try to fix what is not broken, for sure, but we need to take stock and reflect on how digitalization is indeed affecting the payments market, and how we can address these difficult trade-offs. And indeed, that will not be an easy exercise. I really want to be clear that it's not a bureaucratic exercise. We have the privilege of having the right of initiative at the Commission, and indeed we may look as bureaucrats, you know, when we review legislation, but really this is an opportunity to be a visionary here. I think we want to repeat this enough, and to connect all the dots that need to be connected. We want to hear a lot from the industry, regulators, all stakeholders, representatives of consumers, and users in general, retailers, companies. And we have already indeed identified a few key areas, as I presented earlier. We have other initiatives running in parallel with which we are fully coordinated, which are the reflections on open finance. PSD2 was, you know, baseline for the further development of open banking and open finance. And we need to reflect on what piece of legislation is best placed to support the further development of open finance. And again, we are very open in this exercise, but the important thing is that we ensure this consistency that all of you have called for, between payments legislation, AML legislation, data protection, etc., and to avoid as much as possible a piecemeal approach. So that's indeed our goal here. And I guess that we can have many conversations in the future about how well we do on achieving these objectives.
Thank you, Sue. That's why we've got an annual FinTech conference. We didn't start that way, but that's why we ended that way. I think two things. One is there was a question for you, Eli, by Pascal Brenn, but I think what I'll do is I'll take that offline. You can answer directly to her, if that's okay. I think what I take away is, you said it, Sue, but I think 4 areas that came out of this discussion where I think improvements are helpful. It's around strong customer authentication. It is around the making open finance or making open payments work more clearly within the PSD. It is ensuring customer protection, and it is about scope. Maybe not in that order, but those are certainly 4 themes that have come out of it. And I guess a strong request for a more outcomes-based approach. And as Mario said, focusing on what payment institutions should do or shouldn't do within the PSD, rather than overloading them with many other initiatives at the same time. But that helps you, I don't know, but we wish you luck with the review. I thank the whole panel for the discussion. We could have gone on for ages. I always realize that whenever we do these conferences that we could spend so much more time on the issues. But I thank each of you for kicking us off this morning.